Founded in the 1960s, Macklowe Properties was a family business. The father, Harry Macklowe, has been a property player in New York City for over 40 years. But his risky business proved to be too hot to handle, forcing the sale of one of the firm's flagship properties, the General Motors building. Enter the son, Billy Macklowe, who took over the reins in 2008. 2 years later, he started his own firm, William Macklowe Co. In a precarious time for the real estate market, he's managed to purchase one property while seeking out several others.
Well, he has just raised money or started an investment vehicle that has a capacity to raise up to $1.5 billion to buy even more property. Billy is here with us. Great to see you again.
Good morning, Betty. Great to see you.
A nice regular segment that we have with you every once in a while. Okay, so Billy, before we get to this investment vehicle and what you want to buy, the last time you were on in January, I think you had just bought this property at 6th Avenue, right? 636?
636 6th Avenue, correct.
And it was half rented, I think, when you bought it. I mean, have you been able to get more renters in here?
We've had a very successful turn on this investment. We acquired the property, as you mentioned, with 60% vacancy in January, and we're now 100% occupied.
100%? Okay, yeah, so who'd you sell to? Or rent to?
We rented the space to Second Market, the alternative stock exchange that makes the market for restricted shares in pre-IPO companies. So they think they have a terrific business model, and it was sort of the type of tenancy that we were targeting with this investment. We were trying to be sort of outside Midtown, look at the property differently, and look for a diversity of tenancy that has different demand generators and is not solely reliant on financial services.
Right. In other words, you're glad you rent it to them and not to, let's say, a major Wall Street firm. Is that right?
Well, I guess that would be predicated upon the size of the security deposit. We're very happy. We've had a great success. We've outperformed on the investment in every respect, from absorption timing, rental achievement, and our financing execution.
Well, I say that, you know, a bit cheekily because, I mean, aren't there a lot of concerns in the commercial real estate market that if we're going to see massive layoffs on Wall Street, that could potentially be another shoe to drop for the commercial market here?
I agree with that. I think there's a sort of a bit of a wait-and-see attitude. We've had terrific leasing numbers throughout the year. Velocity's been strong, and I think we're starting to see it pull back. Some of the recent statistics that have come out, sort of, you know, August, and obviously these numbers lag.
Right.
But you're seeing Midtown rental growth and pricing increases are stagnant.
Okay.
And we're seeing a bit of this. So there are definitely macro factors that we, on the investing side, are very closely watching.
And that's something it seems Tony Malkin we had on as well here earlier this week. And I just want to run for you what he was saying about what's going on with the smaller, medium-sized businesses here in the city.
I think there's a lot of uncertainty. They're very concerned about making long-term commitments, and in most cases, they're interested in extending their lease term rather than taking on a new lease.
Is that what you're seeing too, Billy?
I think that Tony's absolutely on point. I think we've seen that also. I think I made the mention perhaps to you in one of our subsequent prior interviews that space use has changed as well. So it is a lot of staying in place. Companies are finding ways to be more efficient with their space. A 200,000 square foot tenant in an older iteration of space planning might be able to renew in place and come down to, say, 180,000 square feet by efficiencies of new design. So I think Tony's right, and also obviously to move requires significant capital outlay by the tenant.
Right, just in and of itself. Billy, so let's talk about this investment vehicle. It has the capacity to raise up to $1.5 billion. You know, when you do, or as you're doing that, where do you want to deploy this money?
We've created an investment vehicle called WMC Ventures. We decided that instead of trying to go out and do a blind pool discretionary fund with, you know, disparate LP capital, we joined hands in a strategic investment with Grove International Partners.
Okay.
So we've raised a significant amount of capital with them, with our capital alongside.
How much have you raised so far?
We have the capacity to do about $1.5 billion of property acquisitions while remaining kind of at a 50 to 60% leverage ratio. We're going to try to deploy and invest capital on a very conservative basis, and we are exclusive to Manhattan.
Okay.
And we'll focus really on commercial and some residential activity.
But how much have you raised so far, and where are you going to put that, though? What are you looking at?
Well, right now we're trying to see where we want to put the money and see what the acquisition opportunities are in the market. We've been focused on one 200,000 square foot office building, similar profile to our 6th Avenue acquisition, but I think we're really trying to understand where the market's going and to really feel pricing out. And
just last thing, Billy, is there anywhere or anything that you would like to buy right now that you either can't, or the price is not there, or even the supply is not there?
We're seeing limited supply in the acquisition pipeline right now. I think, you know, when the equity markets started their their dance in kind of late July, early August. I think it slowed things down. It slowed things down both on the equity side and the debt side. I think balance sheet lenders are still very active. The CMBS markets, the way we see it, are starting to dry up, and we think that's going to have an impact on the sales market. I think, as I mentioned to you, we're only focused on being with balance sheet lenders and kind of being relationship driven and a different capital approach. So that's kind of where we're planting our flag.
Okay. Billy, great to have you stop by
Thanks
again. I like how you described the equity markets had their dance in July. I've heard it described other ways too. Great to see you again.
Nice seeing you.